Hello fellow traders, one more episode of the series Forex Debunked. In this series I will try to make an episode every week. We will debunk some very popular strategies out there that can guarantee 100% success, and there are some gurus that claim that can beat the market with some simple strategies. Other strategies are much more complicated. This is our second episode. Today we will analyze the Kangaroo Tail strategy. The reason that I choose this strategy is I thought in the beginning it's something new, but after I tested, I saw that it's been rather old. It hasn't used anything new, even though there is one part in his presentation that our fellow trader does that I really enjoyed it because I don't like to say only negative things. So what is the Kangaroo Tail strategy? You can take some notes. I don't think you're gonna need them. It's a very simple one. First, you need to recognize the Kangaroo Tail candlestick. In this series, in my tutorial videos, there are tutorials about the candlestick. I have analyzed all of them. You don't have to do that. In my opinion, if you start trading now and you have no experience, you don't have to learn all these patterns. Remember, nowadays there are sites that you can choose your relevant asset, binary, cryptocurrency, whatever you choose to trade, and he will automatically, in the platform, they will show you automatically, it's totally free, if there is a formation from of candlesticks. How these sites works, they show you in every time frame what is the most powerful patterns that are appear there. For example, it will say that in the daily chart there is a 3 black crows, or in the 4-hour chart there is a dark cloud. So you don't have to remember all of them. The reason that I have analyzed that is because in this channel literally I want to have any piece of information that it's going out there, and in this channel really you will understand that trading, it might be hard, but I'm really would be glad to help you on increasing your trading skills, let's say, and trust me, it will take time. But for the moment, you don't have to remember any single candlestick pattern. So our fellow trader here says that this is Kangaroo Tail. These are very well known hammer and inverted hammer candlesticks. Very simple to understand. If you don't know what's a candlestick, you should not continue watching this video. I mean, I strongly recommend to go back to my tutorials. So in the Kangaroo Tail, we have a body, and this represents the 1/3 of the total prices range, because this is what's a candlestick. I mean, a range that the prices went at a given time frame, if you are looking at 1 hour or 4 hours. Very easy to understand them. They are also called exhaust because there are candles with a huge tail. The bigger the tail, our fellow trader claims that it's the better. And also I have made some print screens from his videos. Now he opens a market that already took place, and he has highlighted the blue zones, which are previous resistance and supports. He chooses different colors, the blue ones and the red one, because he says that we must find some structure in order for this technique to work. And how this technique works? Actually, you find the candle that you are interested in, the Kangaroo one, and you trade. You go with the trend. Our fellow trader is correct at this point. What I like it a lot in his video is that he's claiming that he's going against of most of the traders. He's using an indicator that shows how many people are opening short or long positions. I have already given you these details in sentiment analysis on what other traders believe that will happen, or what they are trading. And he does a very clever observation at this point, because I admit that also in most of my trades I am going against most of the traders. So let's say if the traders, the most of the traders here are in the 95%, he's willing to go long. He clarifies that in his video. It doesn't have to do with the kangaroo technique. It's just giving an example. Now, because I don't want to waste your time anymore, in all of my videos I'm trading in live markets and in live accounts, and this will make you understand why this strategy is a hindsight strategy. So I will pause this video and I will start a new one, a live one, to open some live markets and see exactly what are the steps and how to use this kangaroo technique. We are back. I have opened the platform. I will enter in one of my demo accounts because I don't want to accidentally hit any overhead. Okay, I have opened some majors. The Fiber, the Cable, Looney, Aussie, most of the popular are here. Our fellow trader in the previous video doesn't make any recommendations on what pair to use. Of course, not all pairs move with the same way. We have talked about the correlation and how to check. So we will randomly choose one. We need to find a candle that will be a kangaroo candle. This is the reason that I have opened the 1 minute chart. So I will try to make it live. Let's go to GPP. The point is that when you're entering or when you're in a live market, you see the prices are fluctuating, they're going up and down. So you have to make a decision at this point without having any structure. This could be a close, but it's not, because it says the 1/3, so the body must be the 1/3. We have a good exhaust one here, so I think that yes. So at this point, again, it's something that has already happened, and I don't want to give this example. I don't know if we find anything else. Let's see. I do not trade the 1 minute. It's very noisy. I don't have any problems with that, but given the spread, no, I won't do it. Okay, I think we have one here. It's got the 1/3. We are in the 1 minute, so I don't think we will have a lot of time because yeah, it broke it already, so no trade. At this point, we would have go short. No, actually, we wouldn't have go short because, again, it's the rule that the candle must look like this one, but inverted. So we are not talking about this one, no. Okay, let's go back. Let's see. Let's scan a bit more. We still have no good example here. Maybe the 1/3 is this one, which I don't think so. It's a very small one. Again, it will be gives a false signal. I think the prices will go higher at this point. Let's check the euro. Nothing to see. I will start making the USD yen, our example, but let's check the UP. It's nothing. I won't change time frames because I want it to be fast, and when you are in live markets, prices will trick you all the time. So, and this is why it's hindsight. Let's go to the USD yen. Now we had this example. Our fellow trader here recognized that we must have a trend. Now at this point we are at the 1 minute. So we would have gone long. It also recommends that there must be a previous structure. Let's zoom out. And yes, there are prices here. There should be a distance for sure. Now it's a downtrend. at this point. Remember, this is the reason that I don't want to change time frames, because we are on the USD yen, and actually if you go on the 1 hour chart, we have a very strong and bullish uptrend even in the 4 hours. So let's keep on the 1 minute and do not change time frames. So at this point the market goes sideways, so you don't know exactly what to do, and we are live now, and let's see that we took that trade. We bought at this point. There is no some clear exit point where our fellow trader says where there is a structure. So there is a structure here, so probably our exit point would be around here. Oh, there is another one. There it is. There it is. So forget everything I said so far. This is the one we are searching. This is the Kangaroo. This is the 1/3. It's a downtrend in the 1 minute. That's why I did it very fast. Now our fellow trader here has a structure behind it. We have the distance exactly as he said it, and now at this point we are going short. This is our stop loss. I will put it with red so it will be very clear, and some juicy lines. Okay, this is our stop loss. We have entered, and now where should be our exit point? Our exit point, probably, we must recognize some previous structures, should be at this point. So we have a very legit and good trade, I would say, with a very good risk-reward ratio. Now let's put that green. Let's put 2 lines, because here as will be our target. And our fellow trader now proposes that here is a good point to place a sell order. The problem is that when you are entering a live market, and this is what I'm talking about, you don't know where the prices will go. So actually you have to, based on the previous one, which is very cloudy at this point, and trust me, even if I change time frames, it won't change a thing. Trust me. Even if you go in the 4 hour chart, or if you go to the daily, you will have these kind of prices. So actually you won't be able to recognize a clear spot for entering or exiting the trade. Of course, in my opinion, it gave me a very good risk reward ratio, so I don't mind trade it. I won't, of course. I'm trading for many years. I do not use any kind of these techniques with 1 or 2 indicators or whatever. At least this is what I prefer. Now, probably we will lose the trade. The prices will go up. The reason that they have stopped twice at this point. Okay, of course we always have to get the bigger picture here, but I had to pause a bit. Now, I open again. I think I lose only a minute. Okay, we are still good. Now, here it comes a problem again. You see another candle which is the same as 1/3. Of course, our fellow trader is very smart at this point, because he clarifies that there must be distance, and this is not a distance, let's say, that we could use. The market is still running. We will wait for a couple of minutes to check the outcome, since this is our trade. I am pretty sure that the prices will go higher at this point. I'm sure that they will make a small retracement. We have a triangle here, but let's see. I'm curious. Of course, this is just an example to understand how hindsight can that method be, since you won't be able to recognize and understand where to enter and where to exit. Let's change to go in a different currency to see if we can spot any other one, because we are in the 1 minute, so probably we will see something. Not here, not yet. Scan again. Here we might have this example also, but it violates its basic principles. Now let's go back to USD. Our trading is still running. Patience is very important. Of course, our fellow trader doesn't say that, but you have to expect to be patient. Now there is another one here. These are very common candles. You can find them like very commonly. Well, it doesn't matter the time frame. The 1 minute is the fastest one. I will keep this live video for about 5 minutes. I don't think I will keep you more. I don't know what the prices will do. No one does. I'm sure that this is a lost trade because the prices will shoot up. But let's see, because at the end, no one knows the exactly outcome. I like that technique only in the part that he trades against the 95%. I enjoy that a lot, but not the rest of the technique because it's just a hindsight. There are many candles that will be at this form because the candlestick is nothing more than a visual representation of a price range of a given period. Let's say in the 15 minutes it gives you so many information that a simple diagram cannot. So that's why all traders must prefer candlesticks, even though there are people that they do not use them, especially if they are looking for the very long terms, weekly, monthly, if they are looking for corn, if they are looking for some very old commodities, and so on. You might probably see them that they are not using this kind of techniques. Let's see, because only 1 minute passed. Nothing to see here again. Probably the prices remain at this point. It also says about previous structure. Remember that when you're entering a trade, let's say that at this point you enter the trade, you don't know what will come next. So actually this comes a problem. Now you have an active trade, let's say at this point, and you don't know exactly what will happen. You don't know what if the prices will go up and down. Okay, you speculate, and you check the previous supports and previous resistances to make it clear that nothing will happen. I won't pause the video, even though there are a couple of minutes there. I will keep it for some more. I'm thinking to give you the information because you will know that the time frame of this that will happen. This is a very good point at choosing this example on the USD yen. I'm very glad that it happened. Let's see if he managed to break our losses. I mean, if we would have a loss trade. It wouldn't make any difference if we have a winning trade. The reason that I want to debunk that technique, probably at this point, yeah, we lost our trade. Maybe our fellow traders saw our videos and put a bit higher stop loss, but no, it's a loss trade. Remember, that's why I did on a live market, and I choose to enter before showing you something that happened in the past, something that happened in already. I mean, you cannot say in trading that okay, you could sell at this point, or you could buy at this point, because you don't know where the prices will go at this point. And I prove it to you at this point that the prices keep going higher. I mean, even there is a downtrend. Thank you very much for watching this video. I hope I didn't abuse your time very much, but I hope you understood how this series and how we will work, because I always try to make live examples in live markets. Thank you very much for watching. Trade safe, and I hope I'll see you in the future.